Hola mi gente, welcome back to the channel. My name is Sean. This is We Are Investing, a channel that's dedicated in investing and financial content. On today's video, we are going to be talking about SVB Bank, the massive blow up, and the potential effects of this blowout. So to get started, if you're new to this channel, definitely consider hitting that subscribe button. And also, a lot of the stuff we're going to be talking about on today's video has been pulled, or we use Seeking Alpha as a resource. So I'll add links to these articles down below. And if you want to sign up, check the affiliate link in the video description for Seeking Alpha Premium as well. There's a lot of great content on there, and you can do research on any given stock, on any given market. There's a lot that Seeking Alpha has to offer. So to get started, what is Silicon Valley Bank, also known as SVB? This is a bank that has specialized or created a niche in lending to early stage companies. Think startups, think companies in tech and in biotech. A lot of these companies have massive cash burn and they require a lot of loans to get started, because without those loans, they will never get off the ground and the company will never be created. These companies are extremely important for innovation and growth in the US economy over the long term, but early on, there are a lot of failures. There are a lot of companies that have massive cash burn. So there is elevated risk. And as we all know, with the Federal Reserve raising rates and coming off or coming out of a low rate environment where those companies, where money was printed left and right and anyone would give them a loan, this time around it is much different. And that is one of the reasons why SVB Bank ran into some difficulties. Now, although this company specializes in early stage companies, it is not a small bank by any means. It is one of the top 20 biggest banks in America, and this failure is the second largest in history and the largest since the Great Financial Crisis, the GFC. Now, according to an SEC filing, as of December of 2022, the company had about, or the bank had about $175 billion in deposits, and it is believed that that number grew to close to $190 billion right before failure. Now, all of those deposits, they are not insured, and the amount of insured deposits is still unknown, but I think it's going to be relatively low because there is speculation. We do not know this for sure, but around 90 to 95% of their deposits were unsecured, because, and that does make sense, because this company, this bank, was lending to businesses that would have more than 250K in their accounts, and therefore that money would be uninsured and now is at risk of being completely wiped out, which is a huge problem in itself. For individuals that have money in this bank, you're probably okay as long as you don't have over 250K, because all of that money will be insured, and I believe you will get that money back on Monday. Any money outside of that, it's still determined on what the bank still has left in its assets, and that will be divvied up appropriately. So that money is at risk. You might receive some of it, you might not receive all of it. It's still unknown. So in my personal humble opinion, there are three main reasons why we saw this bank fail. The three main reasons include deposits, income, and investments, and we'll dive into three categories, or these three categories, a little bit in this video. Now, on a deposit front, you got to think who's depositing money into this bank. A lot of it has to do with venture capital funds from companies that are early stages, and in this environment, that sector dried up. Activity was at all-time lows, so deposits were not coming in like they were before for the bank. That's a problem. On the income front, you got to think, how does this bank make money? This bank makes money through mergers and acquisitions and activities happening in the venture capitalist world, with all of that activity essentially drying up because of the raising rate environment. And because of the environment that we saw ourselves in the pandemic, there was barely any income coming into the bank because they were so specialized in this. But this is not only for Silicon Valley Bank. A lot of income driven activities such as refinancing, loans. A lot of that is on the lower side for banks across the economy. It's not just this bank, but this bank definitely saw the brunt end of the Federal Reserve's raising rate environment. Now, on the investment front, banks do primarily two things. They buy bonds and they lend your money out to other customers. So on the investment front, and let me just read from a Seeking Alpha article itself, it states that as of the end of quarter 3, oh, and real quick, this article called the blow up before it actually happened. So the author has huge credibility in my personal opinion because he was all over this before the thing even happened. So as of the end of quarter 3, the company had $27 billion of available for sale securities and $65 billion of HTM, hold to maturity securities. These securities are primarily close to 80% agency, RMBS, and CMBS mortgages. MBS stands for mortgage-backed securities. Given the bulk of the portfolio was acquired in a lower rate environment, so think post this year, there are unrealized losses, $17 billion in the HTM portfolio alone. Now, this is not unique to Silicon Valley Bank. Silicon Valley Bank might have mismanaged their investment portfolio, but a lot of banks that held bonds prior to this year are seeing losses because as rates rise, the price of the bond itself decreases. So when these companies, these banks want to liquidate some of their investment portfolio, they have to sell those bonds at a loss. So a lot of the money that they have in the investment front is actually less than they had to start with. So when you see a bank run or when you see people starting to pull their money out of the bank and the bank has to cover, they run into some issues. And that's exactly the formula that happened with SVB Bank to cause this failure. You had a lack of deposits, you had a lack of income, and you saw your investments decrease in value. So once they saw all that happening, they had to try to raise some cash, which they were unable to do. And then once that happened, the bank failed and the Fed took over because the system just wasn't working and they were no longer able to cover their customers. So what is the aftermath of having the second largest bank failure in history and second largest by far? What are the consequences or potential consequences of this bank failure? Well, the most obvious consequence are with companies that have money parked in Silicon Valley Bank, SVB. Those companies and we'll get into a list of some of those companies later in this video, but let's just say whichever company it is, you have money parked in SVB. Let's say it's $25 million. That money is uninsured, so you don't know what's going to happen with it. You might receive most of it back, you might not. We have no clue. If there is huge fraud with this bank and all that money disappears, then this situation goes from bad to horrific. But that we do not know yet. We're going to find out in the upcoming days, in the upcoming weeks, what is left at this bank. But while all that gets sorted out, you are unable to cover payroll. So some of your employees might not get paid in the upcoming weeks. They might stay with you. They might not. They might end up leaving. Then you're left trying to find more employees. Maybe the business itself actually has to go under because they lost so much money of their operating cash. The cash that they had at the bank is no longer there and they no longer have access to it. That is one effect of this bank failure. Now, keep in mind, they had around $190 billion in deposits. So it's not like there was not a lot of money in this bank. So many companies, I suspect, are going to be impacted by this. Now, it was stated, pulled from Seeking Alpha, that Roblox said that it had out of $3 billion in its cash and securities, that about 5 of it was deposited in SVB. Roku, on the other hand, had 26% of its cash parked at SVB, around $487 million. We also have, on the crypto front, pulled straight from Seeking Alpha, and this is very interesting, and this just goes that stable coins, even though they might be parked in bonds, are not actually pegged to the dollar, and there is risk behind them. The USD coin, USDC-USD, lost its peg to the dollar. It touched an all-time low on Saturday after the firm behind the coin disclosed that some of its reserves backings that supported stablecoin were held at SVB, which failed on Friday. That dropped down to 0.92 or 92 cents when it's supposed to stay at $1, and we'll see what happens in the future. If they don't get their money back, this stablecoin is going to fail, and that's just another stablecoin that has failed. And now we have a long list of coins that have failed. So we have impacts with companies. We have impacts in the crypto market. We have impacts in sentiment and trust in banks worldwide. We might have some more bank runs. We might see more banks fail. We might see companies fail. And this could or might be the start of the recession. Now, on the markets front, this is very interesting, and this puts the Federal Reserve in a really tough spot. As you might have known, CPI has increased again. So we are still dealing with inflation, and actually some of it is starting to pick up again. So the Federal Reserve, there was question, or people were thinking that they might do a 50 basis point hike at the next FOMC meeting. That might not happen. It might be 25 bips. We don't know. It doesn't really matter. All that matters is the terminal end rate, or the terminal rate for the federal funds rate, which we don't know what it's going to be because it's highly dependent on inflation. But if inflation continues to rise, that puts pressure on the Federal Reserve to continue to raise rates. But the effect of raising rates, as you can see with SVB and maybe some other banks, is that it puts a lot of pressure on them. So we might head into a financial crisis. So now they got to weigh their two options. Do they tackle inflation? Do they let inflation continue to rise? Or are they too worried about a financial crisis? Either way, it's a lose-lose situation for the Fed, because if they stop raising rates and there is no financial crisis, but we still see rising inflation, that's no good for the economy. Now, the markets might take a slowing Fed positively, but if inflation continues to increase, then the market's going to quickly switch its tune, and we're going to be in a worse off position. If the Fed continues to raise rates, then the market might be scared of a recession. We might still see further inversion in the yield curve, and that's also not really good. There's only one good scenario here, is that if the Fed does happen to stop raising rates and inflation comes down on its own, then you have a soft landing or no landing, which is what some people were calling for, which I think is highly unlikely. So yet again, we find ourselves in a situation, or the possible outcomes, they're just not really good in my personal opinion. And this just goes that you do not want to fight the Fed when investing in the markets. You want to stay patient, and that's why I continue to save money and wait for my opportunity to strike, which just isn't right now. Too much uncertainty, and the risk, in my personal opinion, is heavily weighted to the downside. Until we start to see a correction in the markets and valuations become favorable and it's worth that risk, I will stay saving money and continue to build up my cash position in my portfolio. But I thank you guys so much for your time. That about wraps it up for this video. If you like this channel, then definitely feel free to hit that subscribe button and ring that notification bell. If you want to support this channel even more, then please join the Patreon. It's priced extremely low at only $5 a month, just to keep out scammers, and it's also a little support for the channel. But in that Discord server, you will get trade notifications. You are connected to a community of other investors and traders where we go over ideas of investments. We talk the markets, and it's a community, a strong community of like-minded individuals. On top of that, there is a Google Drive that you will get access to that has a ton of books and resources when it comes to investing in the market, which you will have access to through a Google Drive link once you join the Patreon. Outside of that, I thank you all for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.